Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for tuning in for another episode of Zen and the Art of Real Estate Investing. My guest today is Andrew Kim of Share. We're going to talk about passive rental property investing through comprehensive asset management. Now, this is interesting because it's a different twist. If you think about asset management as an overall financial advisor would, now we're going to see how that looks when you put that spin on real estate. Let's get to Andrew. This is episode 195 of Zen and the Art of Real Estate Investing with my guest, Andrew Kim. Andrew is the CEO and co-founder of Share. Share is the easiest way to build a portfolio of fully managed rental properties. Andrew, you make it sound it's so easy. Welcome to the show.
Thanks for having me. And yes, it is easy.
Yeah. Well, let's get into how you got to figuring out the easier way, because I know you started the harder way, like a lot of us did. Did you start trying to BRRRR in Canada, and it didn't work out as easily as you might have thought?
Yeah, BRRRRs sound easy on paper when you could put it in a 4 or 5 letter acronym.
Yeah, right. But you're right, though. Acronyms make it sound like, I'll just follow this 5-step model, no problem, and it's going to work.
Yeah, the recipe is an acronym, so it should be super basic and super simple to follow. It's the ABCs. I started doing BRRRRs outside of the Greater Toronto area. So think like 75 miles outside from the core. Mm-hmm. Back in 2010, homes were like 350,000, around 300,000 US. Sucked real bad at it. I thought I was good, but when I actually sat down to look at the numbers, that's when you realize there's a lot of these numbers that you kind of emotionally forget about and say, hey, I'm doing a good job. But yeah, really bad at it in hindsight. And then, moved to the US and forgot about Canada.
Well, what do you think? What were your biggest mistakes in trying to do the BRRRR, outside of lack of knowledge on the entire process? Because I've been there as well. Even as an experienced investor, I still think it's generally you can make mistakes on properties, especially when you're doing any type of renovation. So where did it go off the rails for you?
I think generally I probably should have sought some mentorship ahead of going into this. I read stuff, I read a lot of different material, but having somebody that has a track record that you can actually message quickly and give you firsthand experience and tactics to how to address certain problems would have saved me a ton of money and time.
Yeah, I definitely agree with that. And I feel like it's like you almost feel like, well, I've read this stuff, so I have a general knowledge. And it's almost like kind of embarrassing to ask someone because you're not sure if you're going to ask them something that it really sounds stupid, when it's not, because you've only read a book. But then you realize later, that wasn't a dumb question. That was a good question.
That's a good point. I always tell people, come in vulnerable and be, self-aware and don't be afraid to ask the dumb questions.
Yeah. And I always think especially in a group setting, if you're at a meetup or something, if you're asking a dumb question, 3 people are going to overhear it and oh, thank God somebody finally asked that. I was just over here in the corner hoping somebody asked this basic question. But I think if you ask smart, basic questions, that's what helps you get to the next level. And as we all know, even again, experience-wise, things go wrong on a house. And sometimes they're I can handle this, but you don't really even know what you can handle because you're not sure if you're doing it right.
Yeah, exactly.
So did it turn out that the profit margin just wasn't as large as you thought? Because I've often inflated my profit margin just by I'll just eliminate the holding costs. That doesn't count.
Yeah. So no, it did not work out to be anywhere near as profitable as I thought. The equity on the exit, the ARV, nor the rent came out to where it was supposed to be. So no, it was a complete flop. And that was at the point of me already forgetting certain line items, right? Yeah. So it was not good.
Yeah. Well, going back even a little further, when was the first time, growing up that you thought about real estate as something you wanted to get involved in?
Yeah, I always try to pinpoint this, and I feel like, my parents, they had invested in sort of the Midwest of Canada,
Hmm.
bought land, and they always told me, real estate's a great thing, but, I think they lost money on that deal.
Yeah.
But somehow I think that sort of manifested itself. And then I think the neighborhood I grew up in, a lot of my friends' parents were starting to get into real estate. So I'd always somehow innately had this idea that, real estate is a very good safety net. And I like the idea of physical real estate where it's not
Yeah.
just some sort of air asset. So yeah, that was ingrained in me young. Again, I can't pinpoint the point where that actually like manifested itself, but I've always thought real estate was the great sort of plan B.
Yeah. And so what led to you taking action to getting that first property? Was there a book or a moment where you're like, I just need to do it now?
Yeah, actually, it was more of my risk taking sort of appetite. So
Yeah.
my parents were failed entrepreneurs as immigrants. They've tried multiple service based businesses,
Yeah.
stores, retail stores. And I knew that like I had some sort of risk appetite, but I did not want to take a leap into a failed business and have nothing
Yeah.
to fall back on. And I always took that as education as my my plan B. But then I'm like, that's stuff to go get a job. But I don't know if I go back and get a job, I'll never get back into the entrepreneurial world. So throughout high school, university, I was always working, doing something, saving up money. And then that's what got me into the BRRRR straight out of college or university.
Yeah. Wow. Yeah. But did anyone say like, hey, this is a good idea? How did your parents feel about it at the time when you're like, I'm just going to try it? They're like, we only did land. So
Yeah, no, I didn't even consult them, to be
yeah.
honest. I was like completely independent. At this point in my life, I had had so many like small businesses. Like I
Yeah.
was very entrepreneurial, and this was like, I think out of all things, I was like, I'm buying a house. They were like, yeah, yay, like finally doing something that requires a little stability or has a little stability. So no, they didn't really interfere with that part. That was the only part where they were actually could understand what the hell I was explaining to them.
Yeah, I think that's a really interesting point and a common thread among kind of young entrepreneurs that when you get to the house, you have built up a risk tolerance, but also, as you said, like this is a tangible asset. Like if I add something to it, it's going to be worth more if I do a good job. Even if I just let it sit here, it's going to be worth more. It's just generally that's how it works. If you buy at least in an okay area that's not, going down the tubes or something. So I think you enjoy the tangibility of it, or at least at that time where it's like, oh, well, I can go look at it. It's going to go up. I can also, if I wanted to add another level, that's going to add value to it.
Yes. Yeah, definitely.
Yeah, that's what always stood out to me. I invested in stocks as a kid, and I still invest in stocks. I like it. It's a nice, steady thing. But, what can I do to change Peloton stock? I can't help them. It keeps going down. And I'm like, hey, look at that. I'm just sitting here. So it kind of at some point you realize, when you touch real estate, even if you don't make as much as you thought and you make a little, you're like, wow, I could do better next time, hopefully.
Yeah, like to your point, I like the fact there are levers that I have control over, right? So being able to spike your returns by doing X is always a reassuring thing.
Yeah. Did you carry that thought with you when you got to share? I mean, we'll go through the journey, but I mean, that's kind of, you're trying to make it easier for people to figure out who maybe have less time or don't want to do failed BRRRRs, like you said.
That is exactly it. Like, fast forward like 10 years from my first sort of US investments, my portfolio, like I was completely, I guess in that world, they would call that turnkey where you work directly with a property management company.
Yeah.
But I was still somewhat high touch, my property management company didn't really raise my rents. It probably didn't do the research properly. I probably could have refinanced 1,000,000 times and bought more, but there's no one to really identify these levers and say, hey, Andrew, there's these 3 levers. These are the costs for each, and these are the returns of each. Which one do you want us to do?
Yeah.
So that was kind of the impetus moment. It was like, I need something for myself. I need what we call an asset manager that sits on top of the property manager to really actively try to grow my portfolio while I focus on doing whatever I'm doing full time, family, profession, and whatnot. So yes, that definitely carried.
I was thinking just before you said that, an asset manager to run the project manager or property manager, like, yeah, that's actually somebody to just, because those are different types of advice, to say like, oh, well, how can I get depreciation from this asset? Like the realtor they don't even know what depreciation is. They don't even own any houses, most realtors. So, which is crazy, by the way. And then, property management, if you don't have a lot of units, like you're not a high client for them. If you have 2 single families, they could care less about you.
Yeah.
So they're not really working hard to up the rent. They're just going to get it up a little so it looks like they're doing something. And so, like you said, there are all these different things, but there's not like one overriding person who can tell you, hey, you need to focus on this. There's a lot of different people who can help with that.
Yes, definitely. Chasing the bottom line, chasing the top line, looking at more than just repair, maintenance, and leasing. What's your financing strategy, everything.
Yeah. When you started buying, did you get any, like, I found now, of course, door culture is very hot. People like to acquire doors, and I don't think they're really examining the doors that they own. Did you ever suffer from that at all, where you're like, oh, well, I have 3 or 4, units, 10 units, but you don't realize like 3 of those units suck. Why do you have them? Just sell them.
Yeah. So I think I fell into the trap that many others fall into. Sometimes you acquire properties through channels that you find convenient, right?
Yeah,
like I knew a realtor in a certain area that has some investment background. They also happen to have a property management company in that region, and they also happen to have networks of contractors. So I'm like, oh, look, it's turnkey. It makes sense. They've done it before.
Easy.
And then you get down this rabbit hole and you realize, oh my gosh, I'm only buying one type of class of home.
Yeah.
And on a per unit basis, when the Excel spreadsheet has only got 6 lines of costs, it looks great. But then in reality, when you're looking at what the market is doing, what that neighborhood's doing, it's not going in the right direction. Then when now that I've got 20 doors, I realize, oh my gosh, I've got quite a bit of turnover or vacancy on a good percentage. Yeah. Realizing maybe I should have not invested in that area.
Yeah, and I have found that people who get interested in more turnkey properties in the beginning, they are focused on who they know and where, so they could be more spread out, so their property management then becomes inefficient because it's not baked into a system that's been built for them. They're just like, well, I have Bob over there, I have 1 unit in, Indianapolis. Like, so you're paying the max amount for property management instead of doing what I prefer. But I still do have FOMO I just like cities. But clustering, if you get 10 units in the same area, then your property management per unit is going to cost way less.
Exactly.
Yeah. Are these some of the things that you tried to solve when you came up with the idea for Share with your co-founder?
Yes, exactly. So because we take, unlike some turnkey providers where we say, okay, here's your home, we'll do the renovations, we'll find your property management, and then you're now working with the property management. We take on sort of the long-term asset management role. So we are sourcing every service provider and we're like your Costco. We're pre-negotiating rates, master policy. So we are pushing down like your property management costs, your insurance costs, and passing that bulk savings to our client because our service providers only ever see Share. And then our system splits that all up from an accounting perspective to a per entity basis.
Yeah, that's definitely more streamlined because I think a lot of turnkey or rent-ready operations are like, cool, now we've sold you the home. Here's your property manager. Good luck. We're around if you need us, but it's not that seems like the thing that you were trying to solve, especially from that asset management, that there's one person you can talk to, which just as a general principle for business, I prefer. The lender that I use for buying anything is a broker. So he can get wholesale deals from all of these mortgage companies, but I don't ever have to talk to the mortgage company because I don't want to talk to anybody. And is this part of your thinking as well? Like, let's just make it easy, one person to at least generally talk to about my investments overall.
Yeah, that's exactly it. We do the bookkeeping, whether you've got 3 properties in 3 different states. We're the single person. They don't need to know that there might be 2 property management companies behind the scenes. It's all streamlined to them. Yeah.
Yeah. And then you are in the middle because managing the manager is so important when you have property management. And I think that new investors kind of just, they miss out on that. Even experienced ones, they're like, well, cool, I'll just hire property management. But if you're not checking on the stuff that you're doing, you're losing money every month without any question, like, why'd you do that service call? That doesn't even need anything.
Yes. They could totally run away with your reserves or your renovation budget because they're not tracking that. And it's highly convenient for them to pick the most convenient option, which may be the most expensive one. And it's funny because like our clients, we purposefully work with sort of jaded, experienced investors that have worked with property management or have done the management themselves.
Yeah. Yeah. I mean, both are bad. I mean, they can be good, but as we were saying before, I think one thing that's really important for investors to know that if you don't have a lot of units, you're just not that important to a property management company. They may come on and say, no, we appreciate everybody the same way, but that it's not really the case. They want to manage 100-unit buildings and people with, a portfolio of 13 multifamilies. That's cool.
Exactly.
2 single families that are, renting for $900 or $1,500. It's just not at the top of their line.
Yeah.
So they may, forget things or do an extra service call or not pay attention the same way because it's just not, I guess not really their best client.
Yeah, 100%. That's why we can have that sort of threatening power because we bundle our portfolio together with multi-state property management companies and then make sure that our contracts are not sticky so that we can threaten us walking and moving the portfolio.
Yeah, and you're leveraging multiple clients without the clients having to know because you guys could switch it up in the back end and still create a seamless experience there. Yeah, that makes a lot of sense because I think that, if you look at just trades in general, as someone who's renovated properties, it's a disaster. Contractors, plumbers, electricians, because they don't run their businesses like businesses. They're usually like, you get the invoice 3 months late, where it's just because they're really good at the trade part. But this is something that I think for investors can be really helpful to just make it easier for them. Like you said, I mean, that's the goal, make it easier. Because real estate investing, it can be easy. I personally think it's lower risk than a lot of things out there because of what we said, the tangibility. If you buy right, you can't really mess up unless you just do a horrendous renovation that nobody likes, which is possible, you know. So it's very interesting. How did you get to the start of figuring out that you wanted to create this company?
Yeah, so I've been a tech entrepreneur for quite some time, so I'll kind of speed through the history. But I moved to California in 2011 for my first technology company, was backed by a lot of venture capital firms, sold it after 4 years, came back to Canada, started growing the family, and then took a corporate job, probably from the opposite end. It was a very high stress, fast growth job. And as the kids got older, I got niched to do another company. So I quit that. And then I quit that in late 2019. So I'm at home. I'm like, okay, got to now focus on starting my next business. And then the pandemic hits. And then all of a sudden, all 3 of my kids are at home with me while I'm trying to start this new business.
Fun times.
Oh, yeah.
Were you one of those guys who's trying to do a business Zoom and the door opens and then a kid comes in, throws pasta on the floor or something? Yeah.
Something silly like that. Like I've had it all happen, like blurred screen and then his face pops up over my shoulder.
It's just like, and you're like, oh, come on, this is a real call. It's not just a prank call.
Like I have my headphones on, so I can't even hear them coming in. And all of a sudden I see my daughter's face unblurred in the background. It was not fun. So I had to, my wife's in the clinical research space, so she was super busy. So I'm the one that's technically unemployed. So I'm like, I got to take care of these kids. And I'm like, oh my gosh, there's no way I'm going to be able to think of an idea, raise capital and start paying myself. And I'm like, okay, well, at least I can live off of my existing real estate portfolio. Yeah. And then I actually had sat down, looked at it. And then that's what, because I've been busy the whole time. So I'm like, okay, I've got real estate, diversification check. But then I know I see money coming in my bank account. But then when I actually get down to the line items, like, holy crap, these are all under market in terms of rent. And holy crap, do I have a ton of equity in this stuff? Why is this
why
thing
am I
not bigger?
tapping that?
So I'm like, okay, I'm gonna refi this, but I don't have time because I remember the first few times it was very time consuming, right? Working with all these different parties, and then I haven't been in the real estate space for a while, so now I got to research all these new tools. How do I actually figure out the rent? How do I find a refi? And I was like, oh my God, I need to figure out how to do this so I can deploy more capital, because living in California gave me a wine habit that I needed to support.
California does that on a lot of things. It's just a costly state to live in.
So that was sort of the birth story. I'm like, I need to deploy capital. I need a trustworthy place. Working with a property management company is not enough. I want somebody to grow it as if I was full-time investing. So that became the birth of, there needs to be an asset manager that can treat my portfolio like it's a private equity or a REIT without taking all the upside. So that's what we say. We say we're giving you the institutional asset management, but for everyday investors.
Yeah, I like it. And something different that I see about you and honestly other guests on my show, because I don't have anyone on who doesn't have an investing background. Even if the company looks cool, it's not a match for me unless somebody
Right.
has that background. I've seen a lot in the real estate agent space and the investing space, like the higher ups in all of these real estate companies, like have never invested in property. Like maybe they have real estate, but like they and then they always say like, well, we're a tech company. And I'm like, but everything's real estate. Like,
Yeah.
why doesn't someone know about real estate? And that's the difference with a company like Bigger Pockets. Like all of them are investing, all the people who are there. And that's how they grew that business. That's something different though for you because you brought the experience. So even if you bring in other people who don't, they're probably like, well, that's a pretty good idea, Andrew. Not only is this company cool, but why don't I have more real estate?
Yeah. Yeah. So like I came from like, I guess the consumer problem, like as a user, this was a problem, but then technology is my passion, real estate, my passion. So this is like the perfect birth child for me. But I knew that in order to scale, if we're going to bring the institutional piece, I had to bring a strong institutional hard hitter in. So our head of investments actually comes from one of the largest foreign institutions. He's done over 7 billion of multi and single family across, I think 15 different markets. So yeah, definitely have the scale now. Just got to build the technology and extract his brain.
Yeah. But have you seen that in the overall kind of like investing tech space, that there's a lot of products where you look at it and you're like, I mean, that's cool, but it doesn't really make sense for real estate in real life. That's where I see some of the problems.
Yeah, I do see that a lot. So that's why I feel that we're in a unique position where it's like, look, we've all suffered the problem as founders. And like each of the founders have all touched real estate. They've all been in my real estate life at some point. So they've got scale. They have the deep pain points and understanding of the end customer. And that's why we've assembled what we're doing, where, some tech companies, but that's a CEO. They're good at identifying the problem and then bringing together some subject matter experts. But we just happen to have the subject matter experts that are actually the founders.
Yeah, startups are really interesting, though, to me, because I think it models a little bit what people think about scaling in a real estate portfolio. Like, it's not as easy you can't just scale a startup. You have to get people to trust you, get people to invest, build the entire infrastructure of the company, create a trust model. And really, when you're investing, you're doing the same thing. You're trying to build a foundation. Have you seen some similarities with your experience in tech in terms of how you're helping people build portfolios that are easier for them to manage now?
Yeah, 100%. So you nailed it right on the head. So when we launched, like we knew that trust was like, I don't know if like other tech companies could really need to build so much human brand, face, name, trust, like how many people like really know who the founders of Robinhood or Airbnb are. Like nobody, but
it's just an app.
But they have to know who we are, so we've had to get out in front. It's why I'm doing the podcasts. I want people to know that there's actually real estate bodies here that just happen to know technology as well. So, and we've lived it, breathed it, lost a ton of money and to figure this out. And now we're using technology to improve our ability and share that amongst others.
Yeah, and that resonates and also kind of makes me think of syndications now, because I've had so many seasoned syndicators on the show, and the only way, they're taking people's money, so they have to develop, track record and trust over time by showing, like you said, hey, we know this area. This is how we're going to help you. This is our experience. But it's still, in the beginning, it's a hard pitch because there's just so many products out there and also so many people saying, hey, everything's easy in real estate investing. So how are you how are you going to get to the consumer to say like, hey, this is your easy shot? I mean, of course, we're doing it now, but I think it's an interesting way to get in there.
Yeah, it's a good point. Like the market is so big. There are many players like us, but they all have their slight twist, right?
Right.
But we've found who we know that is like exceptionally busy, understands the benefit of direct ownership, but just literally does not want to be involved. I'm like, they're one step away from just buying like a REIT stock, but they want the levers and they want somebody else pulling the levers.
Yeah.
And not taking all their upside. So yeah, it is very unique. Like there's rent to retirement, there's roof stock, there's all these marketplaces and different permutations of it all. But it's going out, finding the right product for the right group. And then how do you build trust with that group?
Yeah, that's a good point. There are so many things, but this is different. And I mean, I had Zach on from Rent to Retirement not that long ago. These are different products, and that's what I think is cool about it. But just to somebody who's like basically just looking on the internet, it does probably all look the same. They're just like, ooh, turnkey. And then it's like, well, you don't even know what turnkey is. There's turnkey, there's rent ready, there's fully thing. And so this, maybe, podcasts are the way to get it out there, because it's a different, thing to have this kind of asset manager in the middle, which I think definitely will appeal to those people who are used to working in REIT stocks, funds like that. And then it can be, hey, I want to do real estate, but I don't want to be a landlord in Indianapolis. Like, great market, but I don't know what I'm doing. As we,
Exactly.
all of us have found out, like, landlording is not fun. Nobody thinks it's fun.
Yes, definitely. Yep.
Hey, it's Jonathan. I hope you're enjoying this episode with Andrew Kim. I know you might think I'm going to give you a little bit of information about something now, but this time I'm not. I actually just want to say thank you. We're almost to episode 200, and it's really amazing to me that we're going this strong after this long. And that's all thanks to you. Couldn't get anywhere with this podcast without my listeners, and I really, really so much appreciate every person who listens. Your listenership leads us to about an 80% listen rate, which is crazy. And that means you're listening to almost the whole show. I'd go for the whole show, because now at the end, I'm going to give you a preview of the next episode. But for now, let's get back to Andrew, and thank you for being a listener of Zen and the Art of Real Estate Investing. Describe your ideal avatar. I think we just went through it a little bit. Like, if someone looking around, who did you guys as a company think? Because I always think this is really important when you're building a company. Like, who do you think your ideal client is? Of course, others may come in, but describe for us what that looks like.
Yeah, so typically an experienced, jaded investor.
Right, you said that before. They've had failures of the support in the back end. There are too many clowns in the clown car.
Yeah, that, like, they've done it a few times, they still have it, or they've liquidated them, or they've seen the value, they've got a good few number of units, but they're doing it themselves and realize, look, this is too much.
Yeah.
So now they're looking, and they typically come from, let's call it the States, where, the average real estate price is over 750, where local investments don't make sense. The landlord policies aren't in their favor, and they're looking to go now out of state. So that's typically who we're going after. And then, they're looking like, look, I can't do this anymore. And they actually, a lot of them are like, can you take over my existing portfolio? So that is our avatar, typically 1 million sort of net worth, including their real estate and their primary residence.
Yeah, that makes sense. I can see that first avatar really well, because it was kind of you. You're like, hey, look at all these. Wait, these aren't performing. Wait, I have, 600 grand in equity over 6 properties. Like, why aren't I making this do a better job? But it's because you're busy doing other things. Yeah. And I think that's kind of like the hard balance of keeping a W-2, starting to become an investor. And then what I've seen is, just from knowing and buying from mom and pops over the year, like, the properties are doing, quote, well. So that's why so many people like me are always, you trying to buy properties and you're like, what are your rents? That was like 15 years ago, the rents. And they're like, well, I bought it 30 years ago, so I own it outright. So what, it can make so much more money. And I think that makes sense to me for the avatar, either too busy or like, hey, look, these properties, I just don't really want to manage them all at the same time and be responsible, when there's way more you can do to increase their overall equity and value.
Yeah, I agree. Like, speaking to a seasoned investor, even with 1 unit under their belt, is so much easier than a novice. We do get a lot of first-time investors, and we're okay with that.
Yeah.
But we do prefer, if you have some experience, just because the communication is a lot more fluid, and they have the infrastructure and businesses set up, so it becomes a lot easier.
Yeah, well, it's hard to max out the best part of your business, which just not making it one thing. But this asset management thing is really cool to me, because right when you talked about it, I was like, ooh, yeah, that really makes sense. If you just have one property, you're like, there's not that much to leverage, and like you said, not as many levers to pull if it's just your first property. But that, it's a good educational way for them to learn, like, hey, there's an easier way. You don't have to feel like you have to be the property manager. I do think don't you think it's helpful though to have had your background and, tried to be a landlord, tried to do the BRRRR, own the properties, understood that you were losing, because that makes you make a better product, but also help in that kind of management issue in the middle, help other investors much better.
Yeah, 100%. Because like I'm already speaking the same language as many of our clients, but like for a novice, they haven't felt the hardship, and their scope is so broad. Like, what do I go into wholesaling? Do I go fix and flip? What do I do? Right? So like it becomes like, well, like we've picked the sort of safest entry point, and we're making it safer. So let's go there. And as you get your palate wet, let's go for higher risk projects. We'll go for deeper rentals, or we can go, however you want to diversify. Right.
Yeah.
So that's kind of how we think about it.
All right. So yeah, let me get it straight for the listeners and for myself. Somebody comes to you, they have maybe 10 properties. You immediately get in as this asset manager, help them kind of maximize and manage and institute your property management. But when they want to buy more, how are you guys in helping them advance their portfolio in terms of finding properties, things like that, markets?
Yeah. So typically when they come with the portfolio, we'll be like, hey, look, give us your sort of data tape. But if they don't want to do that, we work with some Canadians too. It's like, we'll figure out, do you have the right entity structure?
Right.
What's your buy box? What state are you from? And then what kind of risk profile are you looking for? Are you looking for C-class deep rental or new construction, infill, new development? Sort of understand their buy box, help them mold their financing strategy as well. What do you have access to? How can we help you get more financing? Put that all on pro forma based. We typically underwrite pretty scrupulously. And then we start an active search. We will search on market, off market deals, our private network. And then when there's a match, we will help them do all the diligence, inspection, renovation quotes, walkthrough, with a final recommendation with a 10-year pro forma, saying, here's what it looks like. And if they like it, we'll help them close it out. We bring in third party title escrow. Once closed, our team is usually in there within the first week doing the renovations. Once ready, professional photos and lease it out. And then they just log into our account, and they can see all their monthly financials and operating statements and year-end tax prep.
Yeah, that's really important. That's where everybody really dumps the bed right there. As myself being the biggest example, every single year filing my taxes late because I'm just lazy. But so in the search, you really private networks, off market, on market, and using sites like MLS, Zillow, just to see what's out there to identify a match to their risk profile with markets that might work, and maybe they have a hard no on markets as well.
Yeah. So we will kind of, based on A, B, C profile, say here are the metros we think are really good.
Yeah.
90% of our deals are typically off market. We are going to probably start, hopefully as deals like inventory picks up, we'll start finding some more on MLS.
Yeah, it's vacant right now. There's literally nothing out there. I was just looking this morning on the MLS. I'm like, wow, this is embarrassing.
Yeah. So, we basically look on off market for their buy box match. And then typically our PSA will reflect their terms, like if they need financing or whatnot.
Yeah. Do you ever find it hard when somebody kind of leaves the market up to you? Because I've been licensed for 10 years, and sometimes people are, or they're seeking coaching or something, and they'll say, well, I'll invest anywhere there's good cash flow. And I'm like, well, that just means you're going to blame me later. I need to know something about where you want to be. Like, are you adverse to the Sun Belt? Do you like the Rust Belt? How does that process work for you? Because I think that's part of the coaching an investor, but also they have to have some input, or else there's too much of a disconnect where later they're just going to blame you when they never paid attention about the return was coming more in the 3 years than in the first year. So give me a little info about that, because I think that's an important part of the process.
Yeah. So we keep track of data on let's call it metro MSA sort of level. Yeah. And then very specifically on zip code. So we will say, okay, based on your B profile, here are the states and metros we're going to go after. Please feel free to do independent research. We can very narrowly put these are the best and we believe in the country. Yeah. Go look at them. And then they're usually like, yeah, okay. I don't think they're doing much research there, but typically when it comes down to the property, now they're searching the zip code. Yeah. But we're also giving you, hey, look, here's a crime score, what neighborhood, index of price, whatever, vacancy, occupancy. And that's when they're going to be spending way more time on there. And usually a red flag if they don't do it on their own, but we do still have the clients that are just like, okay, I trust you, go. But yeah, no, we definitely try to put that out front, like up front, and say, hey, look, these are the metros. If you want to add or remove, please let us know. And sometimes clients will add and we're like, why? Like, why this area? It's not that good.
Yeah.
It's like, oh, but my friend invests there. I'm like, that's not a check mark, right? Convenience and location, like proximity may not be the best, indicator of success.
Yeah, but that's interesting because like a lot of times when I'm just talking direct with someone who wants to be hands-on, I'm always having them, make a list of where they ever lived, make a list of where their friends and family live, and then start reading articles and see where the crossover is, because for them, that's a good thing, but that's not your avatar. And I think that's what's interesting to know. Like you want someone who wants to grow, but doesn't want to really be in the participation phase of managing the manager or playing around with wondering, when do I need to refi this?
Yeah, exactly. When they say, I want to be able to drive there within 4 hours, that's usually a red flag.
Yeah. That makes sense. But don't you think, though, as a tech company, especially, and morphing with real estate, knowing your avatar is really important because, like you said, you may get some brand new people who might fit because you can see them working into the profile. They've got the capital, but you probably get people who you just have to say, I don't really think this is a fit for you. And I think that's always hard as a new business, or even if you look at real estate agents, they'll just, oh, sure, I'll send low ball offers. Why would you do that? It's not a good use of your time. So there are some people who you have to say, like, you're not ready for this yet. It's not really like suited for what you want to do.
Yeah, like I think we're now at that stage where we can say confidently, like, look, we know where this is going to go. And this is going to be too much of a headache for both of us.
Yeah.
But where we are okay with the boundaries are like people that are just entering into our avatar or just maturing enough to exit our avatar. Because we tell clients like, look, you don't need us if you're going to retire early and you've got more time on your hands. Right. Fire us, save on the asset management fees, work directly with a property management company, do it yourself. But in the meantime, let us build it for you.
Yeah, and you by giving them that option, you build trust in a company. I think that's important for any, if you just take it to real estate, I've always found when you have a realtor who's working for you and they're like, you know what, this isn't the best one for you, then you can trust them because they're not, most realtors just like, no, every deal, yeah, buy it, it's good, let's bid more. I want to get my paycheck. But once you have people, no, this doesn't really fit your buy box. That's important over the large scale again, because you guys as a larger company are trying to, prevent people, complaining about a product that it's always their fault. It's been laid out for them. But again, busy people, not going to read everything. What is it like though when somebody says like, yeah, I trust you, just pick a property, you're like, I mean, okay, you're just looking at the best metrics that fit what they've said they want, right?
Yeah, like we'll put it in front of them endlessly, and then oddly later on something will be like, hey, what? I thought I was in this MSA. It's like, well, yeah, you're in that MSA, but it crosses 3 state lines. So like, so it's interesting, but like, okay, that's fine. And then they disappear, and then tax season comes. Like, where are my documents? Like, in here.
Yeah. So markets wise, are there any markets or states that you guys are out of? Or are you only focusing on general MSAs? It is all 50 states, or does it depend?
General MSAs within the Sun Belts, Rust Belt regions. There are some Sun Belt areas we're kind of tiptoeing and avoiding just because we can't, climate change and insurance costs. And so we are tiptoeing around a few of them. But yes, most of the Sun Belt and then the Midwest wide open.
Yeah, that's an interesting point, though, because with rising insurance costs and weather anomalies, like there are some markets that a lot of us are like, I think I'll pass. Like I was under contract on this, an A-frame in an area that I thought was never going to flood. And then all of a sudden it's like a deluge and I ended up not closing because there was no point. The area's in trouble, but like that was an area that wasn't supposed to ever get any water. So that's obviously part of your consultation as well. And running a business, you're trying to see like, hey, where can we make it safer for people? Some of the things that are going to trend here. But those are the areas where people are going to say, no, my friends invest there. My friends have a lot of property there. You're like, well, there's a lot of problems going on. Like, have you seen what happened?
Yeah. Like Florida is just it's constantly, right? Like, it's just like, I want Florida. And I'm like, okay, well, we have a strong operations in Florida. Our partners are all in Florida. They'd be nuts if they're not in there. But we can't forecast after this year. Like, that is it. Like, we can, your insurance is just this big variable that we don't know where that's going to skyrocket to, or if we'll have insurance in 5 years.
Yeah, and look, I lived in Florida for 14 years. It's always going to be a good investor market. You just have to understand the risk. Like I used to have like so many insurances because I live close to the water in Sarasota. It's like, and now even as someone here, I was talking with my sister. I'm like, I think I'm not even close to a flood zone. I'm not even close to water. And I'm like, I think I'm just going to get flood insurance. It's not going to be expensive. Like there's all these other things that you have to think of, because my friends were sending me pictures just, a couple of weeks ago from St. Armand Circle in Longboat Key, where I used to live right near there, and like things 2.5 feet of water. I'm like, oh my gosh, you just don't know what's coming anymore. So you have to prepare for that. And, it's not like those assets are dead. It's just that you have, to your point though, you have to have property management involved right away, because when there is a big weather source, it needs to get, dry vac out right away so you can save the house, because a lot of people aren't going to save their house quick enough.
Yeah, 100%.
Yeah. Do you see any other things like kind of on the outright, obviously weather and insurance are a big deal, that are going to adjust the way that you look at markets? Obviously we have an election coming up. Personally, I can only just watch it. I don't really consider it. I just know there's going to be an election, and I don't really take much account into it and to how that's going to affect my profile. But it's certainly out there, because as we were saying before, there's no inventory, and I feel like people are like, I don't know what to do. So they're waiting on a lot of inventory, and we're all sitting waiting for more inventory to come out.
Yeah, it's tough to see, but like this week and the last week, like rates just jumped 0.5%. And it's like, oh, is it? And the justification is it's got the election jitter. So we're like, hey, can we push out our close to like the middle to end of November so we could see maybe potentially another 0.5 point drop to go back to, where it was. But no, I'd say climate, property tax are the big ones. And like property tax is a big one that I think a lot of people gloss over, where they just kind of take this percentage and drag it over the years. We pay money to bring in a third party tax forecaster and appealing company for our clients.
Yeah.
So to just, word of caution to others that are thinking about buying a property is think more diligently about how property tax increases over time.
Yeah, and honestly, a good tax appeal, you'll win almost every time if you're doing it because you can see the data when it's off. It's like almost a no-brainer. It's just kind of a pain to do. But yeah, that's a good point. I mean, I live in New Jersey. The taxes are just insanity in northern New Jersey. No one knows what they're for, but it's crazy to think when you look in other markets and you're like, "What are the taxes?" You're like, "Oh, that sounds like just a month." 1 month of my property taxes.
That's right.
Yeah, it's crazy. Awesome. So what's the plan for Share? I mean, you guys are obviously growing. You're looking to grow the avatar of people who find you and grow into new markets. Where are you going from here?
Yeah, so we want to continue growing our sort of technology platform to be able to, I guess, for clients that want to bring their own portfolio and say, hey, look, I'm tired of working. I think I do need an asset manager, but also working with a lot of realtors and real estate agent or real estate professionals to complement their services with sort of out-of-state investment opportunities. So we want to work with a lot more real estate professionals, potentially considering like a white label opportunity where we could say, hey, look, just you want an out-of-state single family rental with Jonathan Green, here's the site, right? So we're toying with a few different options. But yeah, that's the plan. Experienced investors looking to, be exceptionally hands off and be a lazy investor and want to build their portfolio through single family. We'll start there and then probably expand into larger multifamily.
Yeah. Ooh, yeah, that's interesting. And that's good, though, that you built it up this way, because I think then you'll be able to make sense, because obviously multi is a kind of a different due diligence sector and everything like that. But if you build kind of the system the right way, then you can just kind of, morph the formulas into that as it goes.
Yeah, and we could graduate the clients, right? As they've gotten a single family portfolio, now they built enough equity, they can go into a pretty reasonably per unit cost of a nice multifamily.
That's a great point. And I think that's really what investors want. It's like cool when you have a bunch of single families, but eventually you realize it's inefficient. Like you could just, why do I have 4 separate units? I can just buy a 7 unit, and have 7 units at once. And then the management, again, is easier. Or you just want to have a little bit of a diversified asset and go forward on that. Yeah, that's really interesting. I'm glad that I got you on the show, and that it just like all clicked on that asset management part, because for anybody who's invested, in stocks or bonds, and like my dad gave me a Merrill Lynch guy when I was 16, and he's like, here, invest in stocks. And, he like tried to block some of my trades, but it was really someone who could give me that feedback. I'm like, I want to buy, like in television. He's like, that's going to fail. I'm like, it's not, it's good. But I think that having that middle person really does make it active for you guys to do it, but definitely more passive for the investors, so they can kind of look at an overview and feel safe, and also get feedback from one person, instead of a million different people.
Yes, exactly. And like one thing to kind of put us in the parallel is we use the metric of internal rate of return, which isn't often used of like a direct ownership. That's a very institutional metric. So we are looking at your financing, debt to, equity ratio.
Yeah, and that's why it's advantageous for people with more properties, because then the IRR really makes more sense as you have a larger portfolio. I can see it making sense. So is the best place to get in touch with you guys, it's at sharesfr.com?
Correct. Yeah, you can create a free account. You can book a call when you're ready, look at some sample properties. But yeah, book a call. We create the investment plan, set up your entities, and then we will start an active search. So what you see on the site are just a sample of our properties, not everything we can get.
Right. Awesome. Well, Andrew, it's been a pleasure. Obviously, I like the conversation. I get amped up about new products because I like tech and I like startup, and I obviously love real estate. So really glad to get you on the show. I appreciate you spending the time with me.
Yes, likewise. Thank you for having me.
Yeah, I appreciate it. All right. That was Andrew Kim, the CEO and co-founder of Share. You can find him and the company at sharesfr.com. I'm Jonathan Green. We'll see you next episode. I know you waited around for a reason, and it's so you can get a preview of the next episode of Zen and the Art of Real Estate Investing. And the next episode, my guest is Sean Graham of Maven Cost Segregation Tax Advisors. Do you know what a cost segregation study is and how it can help you as a real estate investor? Sean's going to break it all down for us next episode. Stay tuned.